I would imagine that you would agree with me when I say it is your money. It is your retirement and it is your life. It's your money. It's your retirement. It's your life. It is. It absolutely is. Who would say anything different? A big question is, are you truly acting as if your money is your money and your retirement is your retirement and your life is truly your life? Or are you letting somebody else tell you something that's not good and right for you? You're listening to the Retirement Income Source. I'm your host, Drew Pelton. Thanks for being with me today. I am talking today about telling signs and getting it right for you. Telling signs and getting it right for you. Well, a big thing that I have to express here, and I'll do it somewhat in story form, is the problems and issues that I see. Now, I cannot in one show tell you all the problems I see and hear and experience, but I want to share with you some fundamental things that I observe that I find is a major problem for people. And it really actually starts with thinking. And our thinking then leads to action, or in many cases, no action. So I'm often motivated by things that happen in my office by way of new clients that come in. And today I'm going to utilize, I'll just say, the doctor. He's a PhD, highly educated man that worked for the state, and his wife, and some things that we uncovered when we were helping them in a financial retirement planning, investment planning, tax planning approach, which is key. So the one big thing I want to say that I believe most people need to be aware of is bigger is not necessarily better, and often bigger is a problem. What do I mean by bigger? Well, the state of Louisiana. The state of Louisiana's programs for retirement, as an example, it doesn't mean that your pension's not good. It doesn't mean that the state of Louisiana isn't good, but it means that what is your money doing for you? Many of you know, if you are a retiree from the state of Louisiana, you know that Empower, or you not only know, but you actually are working with now Empower, and they actually are managing your money. Your money could have been a drop plan. Your money could have been a 457B plan. That's pretty typical as to how you get money over to Empower, because the state of Louisiana needed Empower to help them in terms of all of this management with all the retirees. Well, I have a story I'm going to share with you that is unfortunately not just one story. It is too typical. And so I want you to think that bigger is not better. And before I go along those lines, I want to say this. What's also bigger? Empower. What's also bigger? The name of a fiduciary firm or a brokerage firm. So often people attach themselves to a big name, and I'm not going to do it today where I go through all the names, but I think whatever that name is to you, maybe, just a big name, Vanguard, so I'll just say that. Whatever the name is, Fidelity, etc., that is not your answer to successful retirement investing. The answer to successful retirement investing is really two things. Number one is investing appropriately for you in the right investments that get the job done for what? Typically income. What do you need in retirement? You need income. So you want to have your investments right where you generate high income, but you need good planning. So let me get to this story that started with a nice couple that came to, and this is, I'll say, the doctor and his wife, and they came to an event that we had. It was a evening presentation, and I gave the message of income, the importance of you investing for income. They came in for a meeting, And I'll start with this. I found $200,000 they didn't know they had. So I want to say, without giving any names, but this is a true story. This is what happened. The first thing we do, and this is a state of Louisiana type of stories, but it's relatable to any of you that weren't state employees, by way of, you could find an analogy, I believe, in too many cases where it maybe isn't the state where you worked. But here's what happened. We called Lasers, which is we'll call it the retirement division for some of you that don't know, the retirement division for the state of Louisiana. And we asked them a couple questions. And as I know, and most know, that Lasers is not handling much more than the actual pensions, which means the income that you get from your pension as in the income flow. Okay, good. Okay, I went there first. I just want to make sure they weren't handling everything. So they give me the telephone numbers, and I have most of the numbers, but I always check. Sometimes the numbers change. So they give me Empower Baton Rouge. So the conversation starts out with, oh, there's no money in their accounts. And it was, first of all, the doctor's accounts. There's no money in the accounts. Now, I need to say something, that there was a little challenge health-wise with the doctor, and the wife got a little more involved, and so they were doing a little review and investigation. So she really didn't know. He actually really didn't know. So they're listening. I'm not seeing any overreaction. That was almost as if they had accepted it. So I don't stop there. I find out that after I became a prosecuting attorney, which I am not, and I'm making a point, after I drill down and I keep asking questions, and let me quickly say, had I gotten off the phone, and if I'm sounding a little annoyed, I'm annoyed for people that go through this, and can you imagine you call up and they tell you you have no money in the account? And maybe you don't know. Maybe you're a spouse that you just didn't know. Maybe you think it was spent. Maybe you don't really realize how it's going. It was almost as if they accepted that. Well, I didn't accept it. It didn't make sense to me from everything that I heard from them. So finally, with my prosecuting attorney type of an approach, what ends up happening is the lady, and she was a nice lady on the phone, says, oh, well, wait a minute. Well, first of all, why do I have to be a prosecuting attorney for you to say, wait a minute, now you see something? Oh, it looks like they rolled over some money. But I'm here in Baton Rouge, and I don't know those numbers, so I don't know, and I can't tell you anything. So, and I would have done this normally anyway. I was going to call Empower National, but she now is giving me a little information. Well, let me just share with you that, very simply said, that we went from zero money to $300,000. Now, if all of a sudden you thought you had zero and you accepted that, and then all of a sudden you found out and realized, oh, you do have $300,000, first of all, you'd be joyous. But second of all, I would think you'd be a little annoyed at the very fact that there is what I would call incompetency, because what is going on here? Well, I'll tell you one of the things that's going on here, and I see this regularly, is that not enough people are being informed in the right way with a true fiduciary who is actually able to tell and see what's going on. There's too many people reading computers. There's too many computer screen readers today. You call whoever you're calling, you call any brokerage firm you're working with, you call your 401k plan, and there's too many people on the other end of the phone, as I just gave this example, giving incorrect, not good information. And too often I find that there are people giving advice when they shouldn't, and they're not even advisors, they're not even and they're certainly not fiduciary advisors, they're not licensed advisors. And many people walk away with incorrect information. So it is critically important to see the signs. Today I'm calling this show, the topic of this show today, Telling Signs and getting it right for you. So how do you get it right for you? Well, one of the things is you need to make sure you are truly working with somebody that is acting in your best interest. Throughout this entire process that I just discussed, and this client, they've become a new client now, what they decided to do was to move forward with us in helping them with their investments. I'm going to make a big point here. Do you know that there's been very little discussion about where's the money going to go? Why? I'll tell you, two reasons. Number one is they realize they're working with a planning firm, our planning firm. That's what you need. You need a retirement planning firm. You need a specialist retirement planning firm. You need a retirement investment planning firm that understands the issues: estate planning, tax planning, investment planning, income planning. You've got to understand all the moving parts yourself, at least marginally, and you need someone that understands how to pull it together to make sure you're okay. Now, as fast as I say all this, I can hear the few engineers that maybe are out there listening, and they're thinking, I know all this, Drew. I wouldn't get caught up in this situation. And I just want to say, with all due respect to any engineer, doctor, lawyer, CPA, well-educated individual, I'm sure you have a greater degree of knowledge. When I say I'm sure, normally I find that well-educated people do. But I also find that even at the highest educational levels, things are a problem. It makes me think about this past Saturday. Actually, it was 2 Saturdays ago. I had a doctor that came into the office, and he had been working with 3 different banks. And I won't name them. You would know the names. There are 2 banks that have, 2 of the banks have more of a regional presence. They're here in Baton Rouge, and one of them has a national presence. What did this doctor have? 3 bad experiences with 3 banks. And part of the bad experiences, people come and go. And the people selling stuff, and if you're buying stuff or you think you're buying an investment, that's not a good thing to just buy an investment. You have goals, you have needs, you have desires. What's your income needs? What's your tax situation? And that's normally not the competency at the banks. It was not surprising to me at all that this now second doctor, because I was talking about the doctor and his wife that came in on the state of Louisiana, but this is a doctor that works for one of the local hospitals. And the fact is that he was highly disgruntled with the service he was getting at the banks and the lack of communication. This is too normal, and it's not good, and it's not right for who? For you, because it is your money, your retirement, and your life. All right, well, I'm going to come up for air, and I'm going to do a couple of things here on the retirement income source. I'm going to give away today, again, I'm giving away Dave Scranton's new book, and I say again because I'm going to stick with this for a while, because I think some of you, even if you read Dave's book, The Retirement Income Story, you want to read his new book, The Retirement Income Source. It is a great book to help you understand the power of investing for income and the importance of getting residual, renewable, dependable, reliable income. So if you'd like to get a copy of the book, The Retirement Income Source, give us a call on our office line, 225-831-1394, and we're happy to get that copy right out to you. Or if you'd like to have a complimentary review and analysis of your portfolio, because you're not sure if you might have some issues and mistakes going on, I would highly recommend you give us a call, and we're happy to give you a complimentary review and analysis of what you're doing and whether it's good and right for you. Because why? How do we start out the show? Maybe some of you are just jumping in. It's your money, it's your retirement, it's your life. Your money, your retirement, your life, you've got to get it right for you, and you want to understand the power of investing for income. I want to just, before I take the quick break, I forgot to say this. Do you know what the return was in the funds at Empower that they were in? 75 basis points. You know what that means? 75% of 1%. There's 100 basis points in 1%. That means they were earning, and it showed for 2024, they earned 3/4 of 1%. Well, I don't know what your reaction is, but let me give you a very technical term: horrendous. Okay, so that's not good. If portfolios are not getting in the yield income side at least 5-6%, you probably have a problem, because most people need to take 4 or 5% out of their portfolio. And then you need growth, and you need to know how to mitigate risk, and you need to understand what works for you or doesn't work for you. So you want to make sure you know what you're earning. You don't want to have your head in the clouds. You don't want to have your head in the sand. You don't want to have your head in the clouds. Well, I love Donald Trump. He's going to save the world. Everything is wonderful. Nobody's pushing back on him. Everything's wonderful. He's going to make the economy great. Maybe he is. I hope he does. I'm praying he does. And maybe it is going to be good. But do you know how to go the distance? And what if something happens, to him or whatever? So you don't want to have your head in the clouds thinking everything's wonderful just because Donald Trump's in office. It depends on your allocation and getting it right for you. And you also don't want to put your head in the sand acting like, well, I don't have to do anything, because, everything's good. It's an approach that people use, two different types of approaches, where people end up doing things that are effectively nothing. You are doing something when you're doing nothing. It's nothing, and that's a something, because when you're in retirement, you've got to take charge of your investments, and you've got to make the right decisions. All right. So you can call us on 225-831-1394 if you would like a copy of the book, or you would like to talk to me off air. I'm going to take a quick break. I'll tell you more about these seminars. I'm going to tell you some other stories that I've seen over the years that have gotten people in trouble. I'll tell you about a story when I come back about how I found $250,000 for somebody that was telling me he didn't have this account. He said, oh yeah, it's just a second pension. It was his RMDs, by the way. I found $250,000 at the state. If you work for the state of Louisiana, you may or may not know what's going on. And if you are not a state employee and you're just a retiree, you may or may not really know what's going on. All right. Well, I'll look forward to having you back. Stay tuned. You don't want to miss the next segment. Welcome back, or thanks for joining me, in case you're just joining in here in the middle of the show, or almost the middle. So, what are we talking about today? Telling signs and getting it right for you. Yes, you're listening to the Retirement Income Source Radio Show. I'm your host, Drew Pelton. Thanks for being with me this morning, where I'm doing my best to tell you the truth, the whole truth, and nothing but the truth, which is all about the facts. It's all about smart, excellent approaches in doing financial planning, retirement planning. This show is designed for those that are in retirement and they're doing retirement investing, or they're planning for retirement. The problem that most retirees have is that they don't make the necessary critical shift to a distribution phase strategy of investing, which is more about preserve your monies, get income, get adequate income from income, as in dividends and interest. And too many people get stuck in this normal accumulation phase approach of investing, which is this approach of what you've done for 20, 30, probably for many 40 years. If you started your career when you were 25 and you retired when you were 65, just to make a point, and you saved for 40 years, hopefully you were able to save a lot. Well, you were doing a normally more risk-based, low dividend paying kind of an approach, which is fine and okay when you have a lot of years and you're adding money in. When people are in retirement, they need to make the shift. But that was a little quick summary overview of what I was covering in the last show. But I think it's always good to have this fundamental understanding of making the necessary shift to a distribution phase of investing, which is, again, is about investing for income, which is giving you preservation, stability, mitigating risk, volatility, having the growth you need over time, but ultimately you're looking to generate enough income to get income from income. It's all about income. Today, I am talking more about how I see people get caught up in things that aren't good. So most importantly, you want to know is how you can get out of the things you get caught up in that aren't good, and how can you do good and great things. Well, the topic of today's show here on the Retirement Income Source, and yes, I'm your host, Drew Pelton, is telling signs and getting it right for you. Now, what do I mean by telling signs? Well, telling signs that you may not be in the best position. You may not be working with the best advisor. Now, notice I said the best position, the best advisor, or the best advisory firm. What does that imply? That, I think, implies that you might be okay. Here's a big question for today. The Super Bowl is going to be played this weekend. And do you think that the Kansas City Chiefs or the Philadelphia Eagles have come to the field? First of all, let me say that they've come this far and they've played their games, and now here they are at the Super Bowl to just be okay. And this is a major issue and problem that I think happens to too many retirees, too many retiree investors. Well, I'm okay. I'll be okay. It's okay. All is well. My guy is nice. My gal is nice. It's a big name firm. Everybody knows Voya, Morgan Stanley, Merrill Lynch, Ken Fisher, on and on, right? All the firms. You know, I always say we work with Fidelity and Charles Schwab, meaning we work and we manage monies on the Fidelity and Charles Schwab institutional platform. So that's the professional fiduciary institutional platform for professional money managers as ourselves. So when we work with clients, they get a higher level investment approach, and they get a personalized approach, and they get a customized approach. But back to what I find too many people get themselves caught up in is they think because they're with J.P. Morgan Chase, and they think because they're with Voya, and I'm just mentioning a few names. I could name virtually any name, because just as I would say it's not Charles Schwab and Fidelity, which are the two brokerage firms that we manage monies on, it's not the firms as much as it's us, the professional money managers, that get the job done for the retiree investor in a customized way. So where I see majorly where people get it wrong in retirement investing is they, as I was saying in the last segment, it's this close your eyes, so to speak, go to sleep, I'm okay, everything's okay, I have money, I have my head in the clouds, Donald Trump's in office, I should be okay, he's going to build the economy out, it's going to be booming for the next 4 years, he said it's the golden age. Or you put your head in the clouds because you don't like Donald Trump and you hope and pray and you think things are going to be bad. And so, but at the end of the day, you're not doing anything, and you just think possibly you're okay by way of it's these big firms. And the fact is, and the missing thing can be anything from those answering phones to the actual advisor themselves, which has to do hugely with what the strategy is, the approach, the investment style, et cetera, and what's behind them. as in what is their experience? What is their expertise? So I said it in the way last segment, which is too many people think big is better, big is okay. I have big, therefore I'm okay. What does big mean? These big firms, these big name firms. Too often, these big firms, and you may have heard what I'm about to say, some of you who may be a little more sophisticated, you may hear from these bigger firms who are trying to mitigate, avoid problems with lawsuits because they're so big that they have so many advisors and they don't know what their advisors are going to say. So the advisors are told, well, we don't give legal advice and we don't give accounting advice. And so they quickly tell the investor who is investing, oh, I can't tell you that. You'll have to go to your accountant. Really? I want to say one of the things we do here at Drew Pelton Investment Services, part of the Sound Income Strategies fiduciary investment group, is we provide full service. I'm not an attorney, I'm not a CPA, but I understand the issues of law, I understand the issues of accounting. And I'm not practicing law and I'm not practicing accounting CPA work, but I know certainly enough, to say the least. I do presentations on estate planning and financial investing and required minimum distributions, Social Security, because there's a lot going on, and most of those include some information about taxes. And that's the other thing some of these bigger firms will say, oh, well, we can't talk to you about taxes and you'll have to consult your tax attorney. Oh, really? So if you have, as an example, $500,000 and you have some questions about RMDs and taxes and transfers, et cetera, do you think you really need a tax attorney? I mean, this is so fundamentally easy. You need an independent firm that is affiliated at the highest levels, as I'm saying, with Fidelity and Charles Schwab, and where we have in our investment group certified financial analyst, where myself, I'm a chartered financial consultant. So we're able to navigate these waters without having to practice law or do CPA work. And it's all integrated, and it's a high level planning and investment strategy group to get the job done, with the emphasis on getting high yields to get good returns, as in total returns. So back to a little bit of what happened relative to what I was talking about with one particular new client that we're working with. And I'll just give you the quick summary. We go through multiple conversations. This is a state retiree. We go through lasers. We go through Empower, the management group that was holding their 457B plan, and I say they because the wife was involved, the 457B plan and the drop plan. Well, the local Empower lady says, oh, well, there's no money. And then, she's ready to get off the phone, and I start questioning, asking. I mentioned and said in the last segment, I'm feeling like I have to be a prosecuting attorney, pressing and pushing and pulling from every angle. And then finally it's, okay, well, I see now. Looks like he did have some money, and it looks like he rolled it over. Oh, okay, now you're telling us. Well, if the client had called on their own, they would have ended up with zero. And matter of fact, that's what they thought. They didn't think they had any money. So I know you might say, well, how does somebody not know that they had any money? And let me just say, in this particular case, the individual had some health issues, and there was some lack of communication. And bottom line is, the family, both the husband and the wife, knew they had to get it together. We found $300,000 and when I say I found it, they didn't know there was $300,000 at Empower, but we didn't get that information until we talked with Empower National, which is based in Colorado. What am I saying? I'm saying that there's a lot of incompetency in this business, from the frontline people to the advisory level. Now, where could there be, and they weren't even getting advisory services. They just had their monies in mutual funds, and they had it in a bond mutual fund, and which goes to show you how mutual funds don't work very well. And we would never have what I'm about to tell you in our portfolio. But last year, the statement showed in 2024 for 12 full months that the bond fund that the account was put in a couple of years back had only earned 0.75%. 0.75%. That's 75 basis points, or obviously less than 1%. I mean, who would say that's a good and okay return? I mean, it's good that they have their money. It's good that it's preserved, but inflation was significantly greater than that. And over time, this is where people begin to erode the power of their money. Ultimately, they erode their purchasing power. So nobody was calling from Empower to these folks. They were not getting attention, and they had come to an event. And I'm going to tell you about some upcoming events we have. And because they came to an event, they got a chance to meet the staff, and they heard the presentation about investing for success in retirement. They were able to put their house together financially and with their investments, and they are on a track to do good and great and get good and great returns, both total return-wise by way of income and growth, with a target benchmark as we do every day, every month of the year, which is in the 5 to 6% range. I'll just say 4 to 7% as a range. When I say 5 to 6, that's normal. That's just our normal way we do things. One of the things that the story I was telling you about, where we quote unquote found the 300,000. When I say I found it, basically it was there. And it was there, but because of this world that is always trying to put everybody on electronic information, like, oh, if you want to go see your statement, go look online. Well, quote unquote, again, us old people, people that are in their 60s, 70s, 80s, 90s, they don't always like going online. And I'll say at my age and at other people's ages that are coming to our office as clients, that what do they like? They like paper. Well, they weren't getting paper. Somehow that got turned off, so they didn't think they had any money. However that was, it wasn't very sophisticated. And again, there was a health issue involved there and a transfer from husband to wife in terms of helping out that contributed. But the bottom line is they didn't know, and they should have known. And so that's another problem, that everybody wants to go electronic, and people don't get the paper. And then once they get the paper of the statements and where the money is, they don't understand it. I'm going to take a quick break as we are talking today about telling signs and getting it right for you. What are telling signs? Your gut tells you something's not right when they tell you there's no money in your account, or your paper statements are shut off. Telling signs, somebody's not taking care of you. And the bottom line is you have to get it right for you. That's what you're listening to today. You're listening about how you can get it right for you, and you need a fiduciary financial advisor. Okay, what I'm going to do is take a quick break, and I didn't tell the story. I said I was going to tell another story, and I went a whole nother 18 minutes or so. And I have to tell you another story where it was about $250,000 that I found also at Empower. All right, stay tuned. I'll be right back. I'll tell you that story, and I'll give you other information you don't want to miss to get it right for you in retirement. You're listening to The Retirement Income Source. I'm your host, Drew Pelton. Thanks for being with me today, whether you just joined in or you've been following along throughout this hour. Today, I'm talking about telling signs and getting it right for you. It's two different things to me in this sense. Well, actually, telling signs could be positive, but I'm talking about telling signs that are not good, and therefore you must get it right for you. Telling signs and getting it right for you is the topic today. What are telling signs? Telling signs would be a few things here. One, you don't get a phone call from the advisory firm. Two is there's no advisor. There is simply an organization. And if you have certain levels of money, you might not ever get a call. Three, you call and you get a different person all the time. Now, this isn't always, as I've been talking about today, and it seems like I'm picking on Empower only, but I have a story I told earlier, which is we had a doctor, new client that was in the office two Saturdays ago. And he told me about 3 banks here in Baton Rouge, 1 national, 2 more regional. And he had 3 separate bad experiences with the bank, bad information, bad communication. People don't know. Every single one of the people that, quote unquote, sold him something, 1 was an annuity, 2 were some investments through the bank. And the bottom line is the turnover happened pretty quick. There's such incredible turnover in these financial firms that often people are just accept, okay, well, it'll be wherever I get to. Well, is that how you handle the Super Bowl winning, like I was talking about earlier in the last segment? I mean, will the Kansas City Chiefs on Sunday evening here or the Philadelphia Eagles, are they coming to the field with, I hope we do okay? It's nothing about okay. It's meaning not just okay. It's got to be the best of the best. You need best of the best service. You need best of the best investing. You need best of the best advisory help. You need full service. I mean, if you're talking about professional sports, and in this case of the Super Bowl, these guys have to be powered up, in shape. They've got to have good rest. They have to have eaten the best foods. They have to be mentally sharp, mentally tough. They have to do their practice throughout the couple weeks before the Super Bowl as they're getting ready. They have to have worked hard their whole lives. And the bottom line is to go to the Super Bowl and then for investing, to be in the Super Bowl always, to make a point, and to be in the Super Bowl year in and year out, you have to do the things that professionals do, that high-level professionals do. And if you say, well, Drew, I don't like sports, and I'm okay, and investing, I'm not really worried about money, and money's not that important to me, and my kids don't need any money. I guess I just have to say it this way. Do you really think, assuming you believe in the Lord God Almighty, that He wants you to talk like that, or does He want you to be a good steward of your money? A good steward of your money is to do your best to either try to get in the Super Bowl or get in the Super Bowl, or both. You've got to be focused. It is your money. It is your retirement. It is your life, and you want to get it right for you. All right, so always I'm doing Coach Pelton here. I'm always doing the motivational thing. Why? Because I do find that too many people, unfortunately, are not focused on getting the job done. And I'll say I understand somewhat, because people don't understand, or they have fear, they don't know, multiple other circumstances. Those are major things. But at the end of the day, you need to take a step forward, and you need to find a good, true fiduciary investor, retirement investor, who understands the retirement issues, understands taxes, the law, estate planning, Social Security, required minimum distributions, in order to help you navigate through the retirement years. This is critically important to have successful retirement investing going on for you. One of the stories I was telling about the couple, the doctor and his wife, this is not the doctor that came in on Saturday, but the doctor that where we found the $300,000, is when we were putting things together, the wife says to me, the reason why we're here is because when you work with us and you've shown us what we're doing, we have peace of mind. I want to say, as she was trying to find her words, I said in my own mind, peace of mind. Almost like I knew she was going to say it, but the reason why it was so easy to guess and be in tune with her about peace of mind is because I know that that is a fundamental and fundamentally important thing that retirees need and want. They want to have peace of mind, but you can't have peace of mind when you don't know what your investments are doing, when you have too much risk, too much volatility, when you're just not sure, and when you're working with firms that truly are not taking you to this Super Bowl level. Let me say, it doesn't cost extra money to go to the Super Bowl. You just have to work with the right fiduciary firm. The other story that I was going to tell you has to do, just happens to be another state worker. He had a PhD. I say he does. And when he came to me originally, and he was doing our questionnaire and we're finding out what he had, he was telling me about his pensions and where his monies were. And he was telling me how he had two pensions. He was really saying three, as a military pension. He had a pension from the state of Louisiana. And then he was telling me, well, I have a separate pension from the state of Louisiana, which immediately didn't sound right to me. At the end of the day, the bottom line was this. He was taking required minimum distributions that got set for him at a fixed amount, by the way. And if you know anything about required minimum distributions, which you should, but at his age, and for him, he was taking them at age 70 and a half, but he was getting this flat amount. He thinks it's a pension. Well, what it was originally they set up the required minimum distributions for a particular year, but however they set things in motion, they set it in motion at the same level, but when it obviously did not factor in or consider what the balance of the account is, because when you do required minimum distributions, it's based upon the December 31st year before you take the distributions, and that's the determinant amount coupled with the government table that tells you the life expectancy table. And if you don't realize that it's almost never that it's exactly the same amount, I mean, it could be coincidentally, but normally payments go up because if your account is growing, and which his account actually was growing, he should have been taking out more money. All of this said, telling signs of you're not working with the right organization. And he was old enough and in a situation that actually the monies were at Lasers. This was pre-Empower. And come to find out, the money he was getting was his RMD from his drop plan. The drop plan is a plan given to state employees. Not everybody gets it or qualifies for it, but many have a drop plan, and many listening in would know this. It's like a 401k that you don't contribute to. The state puts the money in. And the account was, and I'm calling it $250,000. I think it was actually a little bit more. So here I am on the phone, and I asked the question, can you tell me about this account? Is this a pension? Oh, well, this is this drop plan. I said, well, can you tell me how much money? Well, call it $250,000, whatever that exact number was. And he's sitting there looking like, how could this be? Bad information, not good enough information, not advisory guidance, because he just basically said, I work for the state must be taking care of me. So I hope you're hearing the message here. It isn't always just okay because you work for the state of Louisiana or any state if you're listening in from other states. Or I'm okay because I'm with Vanguard, T. Rowe Price, Vanguard, whatever name you want to say, and somehow you just think the name of the organization makes everything okay. Generally speaking, it does not. You need good advisory services. Thanks for being with me this morning. I'm going to take a quick break, and then I'm also going to give away the book, The Retirement Income Source, but stay tuned as I'm talking about telling signs. What are telling signs? What is telling you that's not good and right? And what do you need to do, as in the rest of the topic, getting it right for you? Telling signs and getting it right for you is the topic today. You're listening to The Retirement Income Source. I'm your host, Drew Pelton. All right, stay tuned for the last segment. You don't want to miss it. We only have a few minutes left here. I have to tell you, I always do it. I do these 2 to 3 long segments, and then I end up with a short fourth segment. In any case, today I'm giving away the book, The Retirement Income Source by David Scranton, The Eternal Guide to Eternal Income. You want to understand the power of investing for income. Income. That's what it's about. Today I'm talking about the telling signs that things are not good or right, and you probably need to make a decision. Well, what is that about? Getting it right for you. You want to get it right for you. How do you get it right for you? You make the shift, you invest for income, you speak and work with a fiduciary, and you get the job done so that you and your family can have the peace of mind they need, the comfort and the confidence, so you can have a lifestyle that is what you want to have. It's your money. It's your retirement. It's your life. Get it right for you. Understand the power of investing for income. Income. It's all about income. Remember that. Make the shift from a growth strategy focus to an income strategy focus. First income, growth second. That's how you preserve your money. That's how you get income you need. And that is how you can get growth in addition. Be smart and make sure you're working with a fiduciary. If you'd like to talk to us, Drew Pelton Investment Services, even myself personally, and you'd like to have a complimentary review, we're happy to look at your portfolio and see how much risk are you taking? How much income do you need? Are you going to be able to get enough income? Will you invade principal? Will you be able to go the distance? Are you paying too much in taxes? Call us on 225-831-1394, our office line right here in Baton Rouge, and we're happy to set up a time for me to talk with you. All right, it's been a pleasure being with you. I hope that you have gotten a lot out of this. I hope you come and you stay tuned during this hour each and every Saturday or Sunday, whether you're listening in on Saturdays, WBRP at 10 a.m. until 11 a.m., or on WJBO from 11 a.m. until noon Central Standard Time. Both times are Central Standard. Come visit with me, be with me, get information, get motivated, make decisions. Call us if you need us, 225-831-1394 for an appointment or for a copy of the book, or if you'd like to come to one of the events, call the office first thing Monday or Tuesday at the latest. All right. Thanks for being with me. Be blessed. Have a good one. And I hope your team wins on Sunday night.